How we account for deferred tax is to do with the balance sheet. Because when we talk about temporary differences, we're talking about a difference between two things. And we don't talk about profit being the difference. We talk about assets and liabilities. So we talk about the carrying value, the figure in our books, and we talk about the tax base. So deferred tax is provided for in full on all of your year-end temporary differences. Deferred tax is accounted for in full on all of your year-end temporary differences. Deferred tax is accounted for in full on all year-end temporary differences. Deferred tax is accounted for in full on all year-end temporary differences. Between the carrying value of assets and liabilities. Deferred tax is accounted for in full on all of your year-end temporary differences between the carrying value of assets and liabilities and their corresponding tax base and their corresponding tax base. So deferred tax is provided for in full on all of your year-end temporary differences between the carrying value of assets and liabilities and their corresponding tax base. There is one very famous, notable exception, goodwill. So goodwill is an example of something that we don't account for deferred tax on. So there is no deferred tax on goodwill. Tax base is the amount. Tax base is the amount as acknowledged. Tax base is the amount recognised. Tax base is the amount attributed to the asset for tax purposes. Tax base is the amount attributed to the asset, to the liability for tax purposes. So tax base is the amount, attributed to the asset, to the liability for taxation purposes. Revisions, impairment, held for sale, segmental reporting, related party, leasing, every time, definition of a sub. Every time there is an accounting standard, you have to effectively be able to have learnt a paragraph, a sentence, a definition that you can get down on paper. So if you're writing about deferred tax, it's a classic thing to be able to write down that deferred tax is accounted for on temporary differences between the carrying value of assets and liabilities, between the carrying value of assets and liabilities and their corresponding tax base, where their tax base represents the amount attributed to. Now, ultimately, whether you understand it or not, you'll always get 1 mark for coming up with the definition. 1 mark. Yeah, an introductory mark. But the real trick of the question is, do you understand it? Can you apply it in the right way? Now, once I start doing this, I have to carry on.
Yes.
So we're going to start doing the application after the break of the evening and the night. So what time do we meet again tomorrow morning? 9:30. 9:30. 9:30. In 12 hours' time. I look forward to seeing you tomorrow morning. I shall be continuing our story on deferred tax. We shall be looking at group profit and loss accounts. We shall be looking at group cash flows. We shall be finishing. Those of you who have enrolled on revision, which I hope is everybody, those of you who enrolled on revision, the revision material has been copied and you are in a position to collect that revision material if you have not done so already. Tomorrow I shall make sure that I talk to you about that revision material because I am seeing you next month for revision. But I can give you some instruction, some guidance, some motivation, some structure to help you in preparing for the revision. Because if you are well prepared for the revision, then you will be well prepared for the mock exam itself, the real exam. Okay, thank you very much. I look forward to seeing you tomorrow.